What is process costing? Well, to begin with, process costing is a method or means of assigning cost of a project or service to a particular stage of the production process. Okay. Now, in some instances, there is only one stage of the production process. But again, if there are multiple stages you're undertaking to assign to each stage, it's generally an alternative to the job costing approach. Okay. Now, what's the formula there? So generally, cost per unit is your total expenses that you incur in the production process divided by the total number of products produced. Okay, now here's the process flow for that. Okay, so you analyze all inventory flow, right? You convert the in-process inventory, that is inventory that is not being completed yet, to its equivalent units, all right? After that, you compute all applicable costs that you're going to attribute to this production process. You calculate the cost per unit of finished good that's in the in-process inventory, and then you allocate those costs to units of finished inventory. And that together should give you the total cost associated therewith. Now, continuing on, when do you use this? You generally use it for mass-produced, homogeneous, that is, the same or similar products that are produced all the way throughout. So you get a large batch or mass production, so it's easy to assign all the cost to what you've produced and then divide it by that number that you have produced during that specific time period. Okay, so it's an internal accounting measure that's useful for that purpose. Now, one step in the process was accumulate all the costs that you're going to assign. Now, how do you do that? That's a little bit more complicated process. There are general approaches to it. One is the weighted average approach, where basically you're saying, you know, cost at the beginning, cost at the end, and then you say the actual cost incurred over the time period. You take the weighted average cost of it and you assign it to individuals. Now, if you're going to do the costing ahead of time, lots of companies use a standard approach or standard cost. That is historical costs that you're applying to the process, and then you would do any reconciliation afterwards with after the production process is done with actual cost versus the standard cost. But this would primarily be used if you're setting the budget ahead of time for what you're allocating there to. Okay, and then there's the first in, first out method. The LIFO is not allowed as part of process costing, but FIFO basically says you're the first layer of cost in, which is generally associated in some way, shape, or form to your cost of goods, or your cost of services, if you will. But you identify those that come in first, and then those are the ones that you account for as being the cost assigned first. So it creates layers of cost in the period in which things comes in. So you have to track those costs as they occur. It's a far more difficult system. But like I say, if you have a homogeneous product on mass production, then you can actually do that over time periods. You can say, what is our first costs coming in that we can then accumulate and assign to the production process. So all in all, this is what process costing is and how it's used in managerial accounting practice.